welcome to the LTO podcast. How are you doing, Chiel?
Very good. Nice to be here in London.
All right, how was your trip?
It was good. I was out here to meet a bunch of friends, and I thought, we should do this in real life. It's always great to see you, to talk to you. We obviously have a long history together, so I'm really looking forward to get into it with you.
Ah, nice. Well, and we are seeing a lot of movements in the market. What do you think?
2 years ago, nobody would have put Bitcoin dominance where we are today. This cycle is Bitcoin driven. And in a weird way, I think it's a good thing. If there's one group, one coin, one element of liquidity in the crypto market that can actually, create the amount of value that we need in order to, basically self-sufficiently fund the rest, which is what happened in previous cycles. Bitcoin moved, people took profit, put it back into the ecosystem, and that's what built the whole ecosystem. I think we need that again.
Yeah, but are we seeing that? Because this one feels different than the two previous cycles, don't you think?
It does. And it goes to this whole heart of meme coins. So last cycle, NFTs, but NFTs was kind of an afterthought but meme coins are a more serious thing. There seems to be a kind of division between, institutional and VC players and, what retail wants to do, similar to kind of what's happening on which chain, if you will. The more TradFi serious money is still in the EVM, whereas, the memes is on Solana and further afield on Sui and Aptos and whatnot. And nobody knows where that is going to go. We will have to wait and see. But I'm still not convinced that TradFi is ready to build, big applications or big things on a chain that, less than a year ago still was having outages.
Yeah.
Right?
I totally
I'm just not a buyer of that. The tech can be as good as you want it to be. There'll be experiments, but it's going to be a while before people entrust, the Visa network or whatever to something that's not EVM. And, I think Bitcoin hasn't scaled. I was at the Bitcoin Amsterdam conference listening to the So-Many-th Lightning talk. And I was like, I heard this all last year and it hasn't moved. So I'm not a buyer of DeFi on Bitcoin, but I am a very big buyer of ETH as the base layer for private, more centralized or more app-centric or more application-specific chains. And you're sort of seeing that happening. I mean, Base is kind of the first iteration of that, where basically Coinbase has their own chain and they're putting it all on their own thing and obviously keeping all the money. And you're seeing a whole bunch of people move in that direction. Uniswap now, I mean, that's massive, right? I mean, that's massive. I mean, that's half the volume on ETH that's going to its own private chain. And so there's all these people that are now doubting the ETH thesis. And I just don't get that. I think it's hugely bullish.
Well, it is expensive.
But remember, when we started building on ETH 4 years ago, right? When you could raise money for any type of project. Yeah. And, it was a build it and they would come type of philosophy. And we built all these beautiful things. But reality is none of these things worked at $20, $30 gas. No. Not for retail, at least. Maybe at an institutional scale. But, our project, a lot of projects are not about that. So it is, what we needed was the layer 2s to happen, for the costs on the layer 2 to actually come down, because we started, a year ago at like 15, 20 cents. We're now sub-cent, right? Now, only in the last couple of months, right? And so only now do all of these things start to make economic sense on the EVM. And the moment we get there, everybody gives up on EVM. It's like, duh.
Yeah,
we're snatching defeat from the jaws of victory here. We're now finally at the place where we needed to get to. And so now all of these things need to be built. All of these things need to happen at that scale, at that cost. And, I still think that that happens on ETH. I think BlackRock is going to have their own BlackRock chain and JP Morgan is going to have their JP Morgan chain, and it's going to be on ETH. Where else would you build it?
Let's jump into that, because this is an interesting thesis, because this is definitely, the market is driven by institutionals, like big time. And the big players, Yeah, the big players
Not
are
the
coming in.
meme stuff, but
Exactly. But like in previous cycles, it was the retail investor making money on Bitcoin, putting it back into the ecosystem, pumping everything that is from ETH till your top 2000 coin.
Yeah.
Yeah. In this cycle, it is predominantly Bitcoin gaining a lot of value. People see it as a store of value. That store of value thesis actually kind of happened to Bitcoin, and they're all in for the long haul. All these big players like the pension funds, the BlackRocks, all of them are taking it very serious, store of value, keeping it on their own nodes and not touching it for a while. Because everybody has the philosophy, they have the philosophy that this will break 100K in not too long from now. And maybe there's no lid on this thing and it will actually go to Apple trillion proportions.
Right?
Who knows? But I think the next stage, and I don't know if it's the next cycle or something that is up in the air, is indeed those parties saying, okay, we are going to move part of our
stack,
our stack
assets
or whatever
right
on chain to tap into a new market. I think if that happens, then retail will follow, because now it's basically retail on the meme coins, because that's the only thing they can get their X50s. And there's still a lot of gamblers and they go from project to project waiting for that 1000X to happen, right? And then on the other side, you have the big institutionals. And in between, there's not so much happening right now. There's a lot of sideways going on in everything that is from the top 50 down to the 2000 in coin market cap. And I think they're building solutions. There's indeed multiple initiatives that are ready to be deployed in the TradFi, but now TradFi needs to move in with their assets to say, okay, we're actually gonna adapt that RWA. We're actually going to move our assets on chain so we can tap into this new retail market that is currently only gambling on meme coins.
Yeah, and it's more than that even, I would say. So historically, there was a big gap between retail on-chain and retail that had an investment in crypto on some kind of centralized exchange. These kind of coexisted, but I would argue the centralized part of it was probably 80% of the people that own crypto have never signed an on-chain transaction. And so DeFi and all this good stuff is like more than 3 clicks away from where they reside on this centralized exchange. So this to me, and that was, in order to venture on chain, you also had to take all of that friction of gas fees and bridging and all. I mean, it was for nerds only. Let's be honest, right?
Yes, definitely.
Totally, it's great stuff, but not for your average mom and pop. Yet Coinbase has 100 million users, 80% of which have never ventured on chain and didn't really have the opportunity to do so. Binance sort of kind of bridged that with the BSC, right? So they had their own chain, their own ecosystem where you could more easily move around. It was that was the success of Binance in the previous cycle. They've since, obviously been slapped and they're not allowed to do half the stuff they were allowed to do so. So that thing has been deflated, if you will. But now, Coinbase leading with its own chain, and I think you'll see much more of that. We're going to get that big swath of retail that was not on chain, but that had an interest in crypto to actually be able to participate. And now that's the part of the retail that TradFi is interested. They're not interested in the, nerds doing on-chain games, right? They want the big money, and there's a lot of money stuck in these centralized places that, doesn't necessarily want to bet on meme coins, because a lot of that money is actually a lot more serious. I'd consider myself one of those people, right? Even though I'm more akin to doing stuff on chain and I'm more in favor of self-custody, so never keep something on a centralized exchange. But still, there is a lot of that, and that's what needs to be tapped into. And that infrastructure also now needs to be built. So, BlackRock basically taking some minute amount of their enormous stack of treasuries and putting them into, or tokenizing, into this BUIDL thing, right? At the beginning, it was an experiment, and everybody's kind of like, "What are they doing?" But what nobody realizes, that is an essential Lego block of what DeFi was meant to be. That was never there, because you don't want Ondo looking after your treasuries. You want BlackRock looking after your treasuries. And then Ondo can build on top of that and everybody can get like on-chain access to that. So that's what's now happening. I think the other announcement that kind of went under the radar, which I think is really big, is BONY. So the Bank of New York Mellon is the be-all and end-all of custody, right? So the fact that all the crypto custody was kind of too heavily dependent on Coinbase was a problem. And they've now realized this. The fact that they've got BONY, as it's colloquially referred to in TradFi, to take up that mantle and to step in there, that is massive. Because that means that all the big boys, I really do think, TradFi is now, it's going to go past the experimental phase. And then the interesting will be who, on the basis of those quite institutional building blocks, can build stuff that is actually of interest to that retail part that never participated in the on-chain stuff.
But is it the retail part, or are it the traditional finance bros that are going to drive the next cycle? Because like if you look at the markets now, like people are doing stock picking, people are trading on their Giro apps or whatever app they have, interactive brokers kind of stuff. Like, are we going to see the retail investors going to the new initiatives because it's easier, or are we going to see the more professional finance bros jumping into the new market because there's so much more money to gain? There's more to play with. There's other types of assets coming to the market because there's tokenization of RWAs. For me, it's not really clear yet. It can go two directions. I would love to see the finance bros to play the game on chain because that would drive the market absolutely to epic proportions.
Huge. And the ETF were the first huge step. Right?
Yeah, but still,
it's still infrastructure,
thing.
right?
It's still a derivative on the infrastructure. It is not playing inside of the infrastructure to what I see it. But if the finance bros start actually participating in the tokenization of assets and trying to basically place that with their LPs, we're gonna have something really crazy. And I hope that part of the traditional market is ready to move into this new market. Maybe I'm too far ahead of my time.
We're usually a bit early. Yeah?
We are early, but like
early
who cannot be a dreamer?
Yeah, exactly. So just stepping back and just looking at what's happening, you see these very big players basically get convinced that there's something to be done here. And there's some very big fundamental steps or building blocks that need to be in place for the others to participate. I think what we're seeing is that being rolled out. I think a little bit more regulatory clarity in the US is going to be a big game changer. So we're not there yet. But if that happens, so now we have custody sorted at an institutional scale. Bitcoin is accepted. It's got an ETF. They're now doing derivatives on that ETF. So the ability for institutions to now play the most volatile asset in the market, which is kind of what they like to do, that is going to drive deep liquidity at a level that the physical asset could never amass, right? No. So now you've got a gazillion derivatives market that is also kind of being onboarded by this thing as crypto, by Bitcoin first, which I think is still a good thing because that's the biggest one. That's the one where we can try and see if it actually works, and then we'll have to wait and see, what that. But I think that still takes quite a bit of time. I mean, I literally think that what they're doing with these treasuries on chain is a mere experiment. Yeah. And it has to be that way because I don't think that the networks, whether it's EVM or Solana, are actually ready for real world adoption. So if we wanted to put, Visa on chain or PayPal on chain today, it would still be a challenge. Yes. 6 months ago, it was impossible from a cost perspective, right? Today, you can see light at the end of that tunnel, but this is what people don't realize. It's still early.
We're not able to process that many transactions yet.
Exactly. But you see that, people are making huge progress and everybody's kind of focused on getting there, and the distance to getting there is becoming shorter and shorter. And so the fact that we now have these real players that are kind of pushing in the same direction, and they're going to help influence and possibly even fund part of that work that needs to be done and build out, I think is really, really big. And so I am very hopeful that crypto becomes more mainstream. And then your question, what is really important? Is it the institutional participation, or is it retail? I think it is actually people. I don't think pension funds are going to drive crypto adoption. But I do think that people who have made more money in their Coinbase account than in their Interactive Brokers account, if given the choice to consolidate in one, would choose the crypto one. That's how I look at that, right?
You might be right.
Right. So once tokenization of equities becomes a thing, and those tokenized platforms, whether it's based on CFD or actual tokenization, whatever that is, but as soon as that becomes regulatory feasible and from a cost perspective, actionable, then what you're going to start to see is these platforms to become ubiquitous. Because right now, it is still the case that if you want to have stocks, you've got to have a brokerage account. And if you want to have crypto, you've got to have a crypto account. There is actually no, body that does it together. And the ones that say they do, don't, right? So Revolut and all these muppets, it's not real Bitcoin, right? You can't take it in or out. You can't send it to somebody else. It's just a number in their centralized database. So that to me doesn't count. But where Coinbase is going now, right? So you've got your Coinbase centralized exchange account. You've got your base wallet. That wallet is sovereign. It's yours. You can do with it what you want. It's permissionless, right? There's a whole ecosystem of stuff that thing can interact with. If that thing could also interact with, buying stocks, I would get rid of my Interactive Broker account in a heartbeat. In a heartbeat. Yeah. Now I've already got my credit card, which I can link to my Google or my Apple Pay. So for everyday life, it sort of works. If they could give me an e-IBAN so that I could actually send money like you do with Venmo and with PayPal to you, me, and the rest, or I run my business, then I would ditch the bank account in a heartbeat. I'm a little bit ahead, and maybe a little bit anti.
That's a step.
But to me, that feels very close.
That is really close.
And that is not
on-chain IBAN issuance. That is going to happen in not too long from now.
Yeah, no, I mean, and they're already there. It's interesting.
It's a really small scale right now.
Yeah. But I use it and it works, right? And it's interesting that the big players are kind of not leading with that because they know that that's going to get them in trouble.
Yes.
Right? But if it's being experimented with and it's being rolled out, then it's going to happen.
Yeah, definitely. That's a step away. I totally agree. I think that's a nice bridge also to Florence Finance.
Yeah.
How's it going with the project?
So, Florence is now in existence for 4 years. We've underwritten over 10 million in loans. We've paid out more than €500,000 in real world interest. And this thing exists. It was built in a time when people wanted to do stuff on chain, and it was born out of your and Ivan's idea. Ivan, that now kind of is the evangelist for Gearbox and runs the Lobster DAO, in a time when there was no safe haven asset in crypto. Right, Tether had less than 20 billion in circulation, and Maker had just gone through an existential crisis. And to build, something like we have, where we basically take, real loans to real people that need it and that are not getting what they need in the traditional banking system, and we put that on chain. And by putting it on chain, we make it accessible to everybody. we fractionalize it, and we provide secondary market liquidity for it, which means that both from a kind of borrower and from a lender, you've created value, both society and financially. That thing exists. We obviously struggled with the gas-free problem in the beginning. We moved to Arbitrum, and that was a big thing because that brought it down to the realm of where you could start to see that this actually started to make economically, sense, if you will. But the real issue is that Arbitrum, there's not a lot of money there. And so, we have very long thought that the answer has to be Coinbase.
Yeah.
And the other problem that we've always struggled with is because we're a euro-denominated platform, we write euro loans, then basically the base currency has to be euros. But euro stablecoins,
still non-existent. In volume.
It's a complete joke. Yeah. And when we started building, when there was only USDT, there was no European stablecoins. Yeah. So there was zero. Yeah. But the development of those stablecoins has far lacked the expectation. And there's a whole bunch of reasons for that, which I don't think, we're going to go back to. But, fast forward to where we are today, you could see that Circle was going to be the first one to be MiCA compliant. Yeah. And that, EuroC being issued on base and being, put a little bit of liquidity into was going to be the game changer. It's not said that EuroC is going to ever, amount to a hill of beans in compared to the dollar stable coins. But at least now it's liquid and, you have a low fee on-off ramp in the form of Coinbase that, everybody can access. And what's more for us is, because this thing is native to Coinbase, right? It makes the 100 million Coinbase users kind of 3 clicks away from our protocol, which was always a problem, right? So if you want to get somebody to actually open a wallet and then bridge to Arbitrum and then put it into your, it's way too many clicks, way too many clicks, right?
3 clicks away.
So 3 clicks is the answer. And Coinbase has finally enabled that for us. So, this summer when the EuroC announcement was made, that for us was the starting shot for the final leg in the evolution of our protocol, which meant porting to base. We signed up a new lending partner, which we're very excited about, which I'm having an interview with tomorrow, Avelinia Capital. And now people can access through their their Coinbase wallet directly on base our Avelinia Vault, and they can earn 10 to 12% interest on an annual basis, real world interest. Yeah, and it's literally 1 or 2 clicks away.
Well, that's an important one because getting 12% on your euro, at some point, that was almost what you got at the bank, not 12%. But we were getting at interest rates, which were absolutely crazy. This protocol was designed when interest rates were sub-zero, literally sub-zero. And then it's where do you get your yield? And then this was the solution. It was highly risk, mezzanine kind of finance, which you could tokenize. So yield would flow to the people that are willing to take this loan risk that other parties are way more sophisticated for. The mezzanine was always driven by the institutionals and debt funds that understood this market. Now you brought that to a protocol level where every Dick and Harry could participate in mezzanine debt, which was quite unique, which I really liked about the whole concept of this. And now this is becoming more relevant with interest rates dropping again.
Right.
So there's more yield to be gained again. So it's more interested to put your money in the protocol instead of leaving it at your bank account doing nothing.
Yeah. So what will happen? So obviously when yields go up, as they have in the past kind of 3 years, also the interest rates on the stuff that we underwrite went up. So when we started underwriting, we were underwriting at 6 to 8%. And right now we're underwriting at kind of 10 to 12%. So that is, the 5% difference. So when, the Fed starts to, and the ECB start to drop rates again, for sure, the underwriting in the private credit market will also be affected. But what happens is it lags, and it lags quite a lot.
Exactly.
And so, and obviously everything that you have on the books, whatever duration continues to yield. So, ours is a platform, because if the shit hits the fan, the Fed can be down at zero in a matter of months. Right?
Yes.
So, but then
you still get 12% on the dollar.
And our book will just continue to run. And then, a year from now or 2 years from now, when we have to refinance, this or that loan, then, sure, we'll probably have to re-underwrite it at 8%. But it gives a lot better exposure in a declining rate environment. And obviously in a zero rate environment, which is where we were, and the jury's still out whether we go back there, right? I mean, all the Illuminati will have you believe that, we ran that experiment, it failed, we're never going back there.
Who says that?
I'm not so sure.
I think
they have to go back there.
We can handle more inflation, don't you think?
No, but it's the sheer quantum of the debt that they can't refinance if they don't bring rates back down that low.
Exactly. Otherwise, we will bankrupt every state in the country.
Exactly. So
on the planet.
So and this was always the idea, right? So if you have one of these yield generating protocols, if you back that with treasuries, then the moment rates go negative, then it doesn't work, which was the problem with all the euro stablecoins when we started.
Yes.
Because you couldn't do a euro stablecoin because the rates were actually negative.
Yeah, you don't want to have
back
euros
it with treasuries, right? So when we started building, it was by necessity that we went out on the risk curve because there was no other way. But with the benefit of hindsight, I think it's the right thing to do. I think it has a very big societal benefit, right? So the fact that you're actually, killing two birds with one stone, you're creating on-chain yields that's, a little bit more safe, and it's uncorrelated to the more wild crypto machinations. But yet you're also solving this kind of SME funding gap in the real world, which I think we found a real niche. And I think, the people that follow us and the people that, like what we're doing and that own our token, they really, connect with that idea, that ethos, that, decentralizing credit creation in and of itself, separate from the yield, which is good, right? But it's a market yield, right? It's not special. It's just a market yield, right? But there are people that say, you know what, I want to do some good with my money as well. And then, you kind of hit that bird as well.
Yeah, that's the philosophy that we always have. Also with LTO as a layer one.
Right.
It always has been, okay, what is the next step in crypto, and which is like a serious one. And for me, that is tokenization of RWAs. And a loan is an RWA.
Right.
And taking that to a next step where you can tokenize stuff you can like hardly participate in, like stuff that's hard to access.
Yeah.
So is for me where you create value for retail investors that are currently in the ecosystem, not having access to this special kind of treatment that the pension funds have, that the VC funds, PE funds have, and creating that bridge, I think is another great solution which drives adoption. That's why we came up with equity.
Yeah.
And like to be able to tokenize hard to access stuff, let's say tickets in
private
equity.
equity,
in private equity, like Andreessen Horowitz or Multicoin or like Paper Ventures, stuff that you can only participate in when you have 5 million to spend on a ticket. And that's a lot of money.
Yeah.
Like nobody can, right?
No.
And by creating the access, and we have some regulatory tricks for that, we are able to let people that just want to participate with $100 spare in their base account to jump into this opportunity and actually yield like the big boys do.
Yeah.
And for me, that is the most interesting part that we are working on at the moment as LTO Network.
But it was always the promise of tokenization, right? That's why a token is infinitely more valuable than a security, because a security is dependent on a certain venue in order to provide liquidity, whether it's the New York Stock Exchange or some local exchange. But in any case, that is an inefficient thing. By tokenizing it, you make it available to everybody with an internet connection and or a phone. And so, that doesn't make it easier. You need to get all those people to actually be interested in your token. But the fact that you've basically democratized the access,
yeah,
that is the huge thing of tokenization
and
there's
creating liquidity. I think that is like something that is far more important even than the tokenization of the thing and getting access for people. It's you create something liquid. You make something liquid that is highly illiquid.
Right.
And a VC ticket is 7 years duration. The current generation doesn't want to wait 7 years for yield. No, they want to go in and out.
Right.
And if they had enough of the ride, they want to swap it for somebody that wants to pick up that dollar and take the other part of the ride.
Yeah, and it's no different in your equity product than in our protocol, because obviously the underlying is not liquid.
Exactly.
Right? It has a certain maturity, it has a certain duration. But the way that the crypto markets are structured with these liquidity pools, you can actually incentivize and create secondary market liquidity. And by doing that, you are unlocking huge amounts of value. And that is a very fundamental promise. The promise was there from the word go. It's just, 3 years ago, it still cost $20 every time you wanted to do something, which obviously didn't work. Yeah. But the concept is sheer brilliance. And thus again, we are only now at the point where all of this stuff is starting to make sense. And, we've experimented all kinds of stuff. Ours is one experiment. You have your experiment more on private equity. And that stuff is now all ready for mainstream. It's now about getting masses
those 100 million base people
to actually participate. And that's going to be a big challenge. Because I think if there's one thing I underestimated when I started this journey, it's that ability to actually, yes, you can build it, but they won't necessarily come.
No,
you
it is
actually
a
have
lot
to,
of marketing and awareness that is being created. And that's the beauty of crypto. Everybody is preaching their own project, but in the end, we're all preaching for the same people. Please TradFi people, please people that are now in interactive brokers, come on chain. Yeah. Come on chain. And it doesn't matter if they go left or right. We need those people to be converted into believers. And one step deeper than the centralized exchange, where those 100 million people that are currently putting their money into the centralized exchange of Coinbase or whatever else exchange it is, jumps into the next phase, goes 3 clicks deeper to actually participate in the new ecosystem that is pretty much ready for it. Like we are ready for 100 million users.
Yes,
easy.
Totally.
So everybody can go and jump in. But now the conviction needs to be there that it is not the meme coins that are going to, make a sustainable way of getting yield. I think that is the big difference. If you want to gamble on a meme coin. Like everybody can have their fair share of luck. And sometimes it actually goes X,000.
Right.
And there are some really good examples of people that are now flying away in their private jets with a big smile on their face.
Totally.
Awesome. I totally
love
envy them. But is that the reality of people that are coming on chain? No, I don't think so. I think the new wave will be the people that are seeking an alternative to their interactive broker accounts and saying, okay, I'm going to put a portion of my money into something else. And I rather allocate it to tokenized debt, tokenized private equity, or whatever tokenized shares. It doesn't really matter.
Right.
But I need liquidity, which is far more important to me than having one bet on a private equity fund instead of putting that 100K, which I have, into 10 private equity funds, where I also have a secondary market liquidity. So that is, for me, the big game changer that people don't even, I think, realize that it's possible. What do you think? That people realize that this is possible?
I think very few people think about this stuff, and even fewer people go out there and experiment with it, because that's what you need to do. You need to be quite experimental at the moment in order to try some of this stuff out. Right?
Yeah, because I think the boomers are driving the VC PE market right now. Yeah, they have their spare money. They work their lives.
Right.
They have their pensions. They're almost there. They unlocked money in their real estate that they have for the past 30 years.
Right.
So that cash is being deployed into VC PE.
Yeah.
they have no clue that this world exists where they can actually spread.
No, because they don't actually do anything, right? They just give it to the other guy, you fix it.
Exactly.
Right.
But I think with easier to access, like how can we bridge that gap between that doing 5 clicks in order to get this money in? Because it's difficult for them. Already putting money into centralized exchange is pretty difficult. And getting that conviction of them putting the money in a centralized exchange and then porting it into something like Florence Finance or equity is a very big gap for me still that needs to be bridged.
I'm still, as was the case in previous cycles, more hopeful of the gain in value of the majors led by Bitcoin drives the adoption of, more out the risk curve type, more experimental type, more newer type of protocols and products. The whole idea that people are going to take their money out of their pension fund or out of their 401k or out of their interactive brokers account to bet harder on crypto, it's much more likely that whatever you put in crypto, right? So that lets you put $100,000 in, you double or triple your money. You could easily done that this cycle in Bitcoin, right?
Yeah.
I mean, from 15 to where we are today is triple your money, right?
Yeah.
And it doesn't take a brain surgeon to figure out that there's a cycle, and you kind of DCA at the bottom, and you'd already be dollar cost averaging out. And if you've done that, you think, I like this cycle thing. Then now I need to park it more. In the historically we would stable up, right? Because there was no alternative, right? So you could only just buy dollars, non-yielding dollars. But now there's an alternative.
Yeah,
and
exactly.
so people. And it's very interesting that you're now starting to see there's a little bit of a resurgence of DeFi. Aave is doing really well, and Maker is going through its new iteration. And so I do think that is what drives, that money comes from inside. And that to me,
that is already in the ecosystem.
Right. What really got me convinced that this experiment that is crypto is actually going to work was when I realized that it was entirely self-funded, i.e. It did not depend on new money coming in, because the people that were funding my project, your project,
were already in the ecosystem.
They were already there.
Yeah,
and they'd made money, and they're like, that sounds like a good idea. That's an experiment that we should run. You seem like a sensible guy. Yeah. Here, you go do it. And that ethos has not gone away. So I think we're much better depending on that than we are hoping that the institutions come. Yeah. That said,
the institutions
did come. Right? The ETF is huge.
They're deploying crazy amounts of money,
and
they're wrecking up Bitcoin.
That is the tip of the iceberg.
Yeah.
So if that which BlackRock is doing, i.e., providing all these people access, there's a whole bunch of them that still haven't. But
will it flow into the next coin? So will it flow? Like for me, will it flow into Ethereum?
No. The way that works, right, is, there's obviously a small part of Bitcoin that, is basically parked in this ETF. So that money is never coming into the ecosystem. That's the same as money coming from interactive brokers into your
exactly.
That probably doesn't happen. But the point is, in order to accommodate them in the existing Bitcoin, given the liquidity dynamics, price is going to have to be so much higher.
Yeah.
So much higher.
We're not there yet.
No.
Which
not
are
even
making
close.
The early believers very rich, that are more likely to deploy.
And these are the people that will continue to invest because they're believers.
Yes.
And they've been rewarded for that belief.
Yes, exactly.
And that is what will drive the next wave of adoption. Then obviously, make no mistake, right? BlackRock is not doing this for charity or because they've been orange pilled, right? They just see a huge business opportunity. This ETF was the best thing that they've ever done in the ETF history, right? It's earning them a poultice of fees, and not only them, there's like 12 others, right? And they're all in there, with their heads in the fee trough, and they're loving it. They're absolutely loving it. So they're thinking, this really works.
This tastes like more.
This tastes like more.
So the next one,
let's tack on derivatives.
Yeah.
And guess what? That's going to be an even bigger fee bonanza.
Exactly.
And so they are going to drive this thing, and them driving it doesn't necessarily bring money into the ecosystem, but it makes the price go up.
It makes the people that are already there make more money, which drips down to the other coins. I think that's a fair statement or fair.
And the only thing that I don't think we, at least I can't fully get my head around, and I've tried to spend a little bit of time on that, is, obviously as Bitcoin gets bigger, it needs more and more money to, make the number go up.
Yeah.
And, how much money do you actually need to reach, some of these price targets that people have? That's the one thing that I don't really, but I am 100% convinced that, of the billions of dollars that have come in to date on these ETFs, it's the tip of the iceberg. Morgan Stanley still hasn't approved. I think Bank of America is still umming and eyeing. There's a whole bunch of these, wealth advisors that haven't even started yet. So they haven't gotten off zero.
Yeah.
And when that starts, it's going to be pretty epic. And the other really big question is this whole 4-year cycle, right? Are we still in that? Is the amount of supply the driver, or is actually the demand now going to take over?
That is a good question.
And do you just get a much smoother, less volatile, slow creep up? I think we could be there. I mean, it's obviously, because it's crypto, because there's a lot of speculation still, but as the sheer mass of that ETF holding, which I'm going to say is a little bit more staid and stable and kind of long-termish, I think it's going to dampen volatility and possibly change the cycle thing. I'm pretty convinced of that, actually.
Well, let's see what happens.
Yeah.
Hey, we are deploying our wallet the next month. It's gonna be super nice. We worked on it for a year. You have no idea how much trouble a wallet actually is. That is unbelievable. The amounts of audits you need to do in order to approve your smart contracts and everything that interacts with it. It's gonna be really nice. It's a wallet for your RWA.
Right.
So you're able to tokenize your RWA and keep and store value of that RWA inside of your wallet.
And it's LTO chain only?
It is LTO chain only, but we bridge to the other chains.
Right.
Yeah, definitely. So you're able to hold your other assets in there as well. So that's going to be a big game changer for us. It also allows us to keep the equity token you possess inside of that wallet. So if you tokenize a loan or share, or you have a private equity fund token, you're able to keep it there in the form of an ownable. That's how we call this derivative on this EVM.
And the ownable is an NFT type.
It's
token,
our
right?
layer 1 NFT type.
Right.
Yes, and that is bridged to all the other chains that are EVM driven. So that's going to be a game changer for us. There's more like interaction between the people that are like in crypto. You don't need to do that from your wallet on your laptop anymore. You can finally do that from your phone. It's easier to interact with. So like it is all about how to make life as easy as possible for the people that use all these protocols and all these applications around it. So I think that is also super important, how to make it as easy as possible. And that will drive also the next cycle of people that are interacting with the crypto space.
Use it.
Yeah, definitely. What else do we have? I think we should talk about what else do we do outside of crypto. I think we touched upon all the subjects so far.
What else do we do outside of crypto? It's been a wild ride the last 4 years. I'll be honest with you, right?
Yeah.
I mean, when we first met, I was, I just kind of quit banking, and I'd been an entrepreneur, kind of, solo entrepreneur in the kind of, helping companies in financial trouble for a few years. But then really getting into this crypto and going full time on it, it's been a wild ride. But it has been full time for me, right? So I have not done anything else. I mean, I was of that founding group. I was the one that was kind of anointed. You go fetch, and we've been at it for 4 years. In terms of what we've built, in terms of where we are, I'm quite proud of the progress that we've made. And it's now all about kind of making it actually work, getting the people
monetizing
it. So, I think going forward, that probably requires more of a different skill, less builder, more marketing, more that kind of stuff. So I think that's going to change. And we'll see how that kind of all pans out. But other than that, this has been a full-time affair for me. I don't do a hell of a lot of other things other than obviously watch my portfolio and try to play the crypto cycle as best I can. But even that's not been easy, right? I mean, you've got to have balls of steel. I mean, even today, right?
I gambled some really wrong bets in this cycle. I gambled against Bitcoin. That wasn't a good idea.
Never do that. No. Never do that. That lesson. But again, like we said before, we came on camera. 2 years ago, I was having a proper conversation with some of my team members, and they were literally, just ridiculing me for still holding, Boomer coin.
Yeah.
You should be all in ETH. ETH is gonna flip and this, that, and the other. And at the time, that made all the sense in the world. But it just goes to show that you don't know where this is all going to end up. And the betting against things that are organic versus things that are very central, that's my key takeaway. So I'm less of a buyer of all these new high-performant blockchain solutions versus, Bitcoin and ETH, which have this kind of
natural OG-ness to it.
Yeah. And, obviously they're in a spot of trouble right now, right? I mean, that's pretty clear. Prices has shown that. But I would bet on the degens every day of the week and twice on Sunday instead of the...
But we're like, definitely, we have been in this space for a long time, and we are inside of that echo chamber.
Right.
And still, we don't always necessarily make the right choices in terms of trading. Like, I definitely burned my hands once or twice on wrong bets, even though I'm doing this on a daily 24/7.
Yeah.
And still, like, I am wrong sometimes. I cannot also predict the market. I have no idea, because there's other forces that drive it now, like way different than previous cycles. I really feel that there's like way different kind of initiatives that are playing right now than
feels different.
Then like this. Well, we started off in the early days where every project knew each other, like where everybody, like, we were a one-on-one with the Chainlink guys, with the Matic guys, with the guys from Maker, everything. We knew them all.
Yeah, but
like
even
all the
going
core
to
founders.
ETH Paris, right, 5 years ago was a completely different experience.
Yeah.
I mean, it could all fit into that little cafe. And
Exactly.
everybody was there.
Exactly.
And now it's like just circus.
Definitely. And I
think
think
Singapore is just on a completely different scale, right? I mean, I didn't go, but the 20,000 people. What was
it's
that?
insanity.
It's insane.
Yeah, and that is all like new projects. Like we are talking about 10,000 plus projects that are now in the space, and some of them will have a slow death, but some of them will actually rise and become like top 100 players. And that is like, you never know which ones are going to be there. And back in the days, it was just, you scratch my back, I scratch yours. There were only 100 projects,
right?
Which was a tremendous amount of fun.
Yeah,
but
it's gotten harder.
It's getting way harder to start.
You see that also
from
in
scratch.
The size of the rounds and the size of the investments being put into these new projects.
Yeah,
it's a very different ball game.
Yeah.
And then, there's that. So the whole VC game has, in a way, gone through a level of maturation and a level of professionality. And then there's the other side of the spectrum, which is, retail meme coin mania, where anybody with 2 mouse clicks can create
a token. Yeah, if you can make a website.
and they can go to a $100 million or $1 billion just like that.
In a day.
It's crazy.
Yeah.
And once you start to see this stuff, and obviously if you're in the flow, then on your feed, I mean, I can tell this is good. This is going to work. That's going to work. I mean, I don't play because it's not me.
I know a couple of guys that actually do.
But the ones where I've thought this is cool. I like this.
Yeah.
I mean, you could have made so much money.
Yeah. There were some really good bets out there.
Yeah.
And there still are, because they're being created every day. And well, is the chance really high that you lose your money? Yeah. Like goes to absolutely zero. I definitely did my fair share of meme coins also.
Yeah.
Yeah. Of course.
This is where I'm a proper boomer and TradFi guy. So it's just almost on principle that's kind of, I don't do it. But recently I've been kind of just, tiny little things. Just whenever I see one that I think, that's cool. And if you do that with bigger amounts of money, then you could definitely make money. And I can kind of sense it. But I think the much more interesting thing is I didn't really get it before. It's like, what is this, right? Is it just the mechanism that we use to create volume on these chains that need volume in order to show some VC that? But it's not.
No,
that.
It's not that.
It is actual.
It's the secret sauce of Solana.
Yeah,
this is Solana driven.
Right.
So I know that Solana is only getting this much adoption because of the meme coins, right?
Totally.
That's why
obvious.
they're so super popular. But who do you think is behind the whole bigger picture in order to get that? It was not a coincidence that these meme coins were flaming on Solana. This is definitely Solana treasury driven. It is.
Yeah. So the early ones, So you call them the Cabal coins,
exactly.
Right?
They were.
But right now,
no, it's not necessary anymore.
There's a whole, raft of these things that are very organic.
Yeah.
And there's this whole Murad theme or thesis that he presented. It's very interesting, and I don't think he's wrong. I think he's wrong in his price predictions, but in terms of a use case for crypto token. We talked about these real world use cases, right? I mean, that's where you and I have spent probably too much time, right? But there are other use cases.
Definitely.
And the one use case that they are kind of getting onto is this sense of community that you can build around a token that is basically filling the void of, failing institutions and global morality. And so you've got this new generation that is feeling pretty desperate about life, that are not seeing any examples in their elderly peers of that's what I want to be when I grow up, right? And they're basically saying, you know what, I'm going to stick with my guys and girls, and we're going to do this little thing.
Yeah,
and
let's pump this meme coin,
and that has real value.
But it's a hot potato
It's a cultural
game.
thing.
It's a hot potato
Yeah,
thing,
you're
right?
always looking at it from the trading. But I actually think that this culture part of it
is definitely
big.
Yeah, of course. Like, okay, so I'm definitely an advocate of that because I've seen the power of decentralized workforce in LTO. It is amazing. Like what you can have people, if you task like in the right way, if you create tasks in the right way, the community will pick it up and they will help you to drive adoption on your chain. 100%. Coolest thing ever. That's what I'm proud of. Like being part of that mega community. There's like, you have a core of like maybe 100 people that are doing LTO every day still for the past, we're almost 6 years down
6 years
they're super loyal.
Yeah.
Like shout out to the guys that are doing that. Like amazing.
Big time.
And then you have a bigger group, like 1,000 people that are holding and trading LTO. Like they're interacting with the protocol on off the mainnet and just staking and participating. And then you have thousands of addresses on the centralized exchanges that are buying and selling LTO. So there is a couple of layers around the protocol, from the team till the people that drive adoption and are advocate for your protocol, that bring in new souls that want to basically participate in this small ecosystem. And that's basically what's happening with all these also meme coins. You start off with a small group, and then they just keep on telling, buy this stuff, buy this stuff, buy this stuff. It's cool, the stuff to buy. This is going to be the next meme coin. And they're creating this kind of FOMO that drives price till crazy heights. The more marketing money you have, the bigger it is. But it's also the power of the influencers. Like the more backers you have behind you, you can definitely blow up stuff that is not tangible, but still.
Well, this is where I think, where I sort of,
That's
took me a while
at.
to get it. So, I mean, your project, my project, there's real utility at the heart of it, right?
Yeah.
So it's less about community, more about, what it actually does. But then when you realize that actually that other aspect is way more important for, cohesion and value. And there's a whole bunch of, newish experiments. Solana is kind of one end of the spectrum. But even at the layer 1 level, so Bearer Chain, I would argue, is community driven, right? I mean, it's all about, just dumb jokes and bear hats.
Yeah.
And yet they've managed to put together a performant L1.
Yes.
And raised huge amounts of money. And everybody thinks they're going to make it. But on the basis of creating this really strong sense of, we're different. And that is something that that's new this cycle.
Yeah, I guess
the NFTs were the start of that.
Yeah.
But it was much more art driven.
Yeah.
And
that was also real, real.
Yeah.
It cannot be too real.
No, it's got to be a meme.
Exactly.
Yeah.
Hey, last thing to predict the 25 market before we end the show. What is your price prediction for Bitcoin 2025?
120, 140.
We're going to end at 140 at the end of the year 25? We're going to see that marker in 25?
Yeah, I think it tops before the end of the year.
Okay.
So, Bob Lucas, all these kind of guys, and nobody knows what it'll look like. And then it might be a slower grind than people think or expect But for sure, prior to the next summer, we get to above 120. And I think 140 is kind of where I max out. I know that's conservative compared to
some of the guys.
But it's my appreciation for the sheer amount of money and value that represents.
I think you're
Bitcoin going from 1 to 2 trillion is different than it going from $500 billion to $1 trillion.
Definitely. The amount
that's what we're talking about.
The amount of money you need to put in to get it to 2 trillion is insanity. But I totally agree. I also think that you're not far off with your 120. That's why I also put my price prediction. Even in Q1 to 25, I'm gonna bet on seeing that. So I'm super bullish. Let's see what happens for our projects and our coins.
100%.
We're definitely strong and ready, and putting the money at work and make sure that we're getting there.
Yeah, we've been doing a lot of work actually on the marketing front. The guys that are running our kind of marketing effort, Altcoin Agency, at Altcoin Agency and at Altcoin Venom. You should definitely give them a follow on Twitter, kind of give you a first-hand insight into kind of what we're doing and what we're putting on that regard. But there's a lot of time and effort spent there because that's where, the next leg of the development of what we're doing is going to have to be. We need to get the word out to the masses, and the influencers have a big role to play there.
All right. Thank you very much for coming on the show, Chiel.
Thank you.
It was nice.
Absolute pleasure.